Hello, this is Brian Shannon from AlphaTrends.net. Today is Thursday, the 20th of March, 2008, and the market's closed. The S&P 500 rallied again today, up $2.54, or just about 2%, and very impressive week for the market. It was looking like disaster on Monday after the Bear Stearns announcement, but the S&P 500 finished with a gain of more than 2% on the week, and the financials were up almost 10%. One good week, though, doesn't change the fact that we are in a bear market, and we've still got, obviously, a powerful downtrend intact, but this week does show encouraging signs in that it's absorbing the bad news without going down any further. And when we look at the weekly time frame, we can see the last 2 weeks have been we're up over the last 2 weeks, and we've exchanged very heavy volume in here as well. Today, was the end of the week, only 4 days, but I think that we probably would have seen this week's volume eclipse last week's when we had such big volume as well, had it been a full 5 days of trading this week. So bullish action within a downtrend doesn't change the fact that we remain in a downtrend. Although, again, it is encouraging to see some of these signs that, again, the market's showing some signs of recovery in here. But a recovering market doesn't mean a bull market. It means that basically, we're not going down the way we were before, and that's one of the first signs of a bottom. It doesn't mean we're at a bottom. I'm real hesitant to call it that because we really still won't know for quite some time. But it was a very encouraging week. You have to just look at it as it is. The VWAP since the January lows that we've been keeping an eye on, market remains below that. It's about 133.70 or so, and the average price the S&P 500 has changed hands this year has been just about 135. And you can see the market is below that declining trend line there, which is also where we see the declining 50-day moving average. So a lot of mixed signals continue to be shown by the market. When we look at the 30-minute time frame, what we were looking at earlier in the week was this trend line here that had been broken after the Federal Reserve cut rates, and then it came back down below it, back to the 5-day moving average. Twice that 5-day moving average has been tested and rallied above. So now, the key level for this market in the S&P 500 remains at about 135. Getting above 135 and holding there for more than a couple days, it retakes the 50-day moving average. It retakes this downtrend line. It also puts the average participant since the January lows back in a profitable position, and the average participant from the beginning of this year back in a profitable position, in spite of the fact that the S&P 500 remains down 10% year to date. So getting up above that level would be an important shift in the change of the psychology of the participants, I think, as more people are starting to feel a little bit better about this market, as, again, it absorbs that big news that really was looking like a disaster. It absorbed it and held on to the gains. So the XLF, again, this group should have been down the most. Instead, it was up the most. So, a lot of times logic doesn't work in the market when you see, one of the largest brokerage firms basically fail. Yet for the week, this group was up 9.8%. For the month, it's now up 2%, and it's only down 8.5% compared to the Qs, which are down 15%, and the spiders, which are down 10% year to date. We're still in a downtrend, but again, the first signs of this process of bottoming might be showing their hand in here. It's good to see that the market got above that $26.20 level that had been support back here, and that's what led to that most recent decline that we had seen. When we look at the 30-minute time frame, actually let's back it up to a 60-minute time frame, because I want to show you here that we've still got this little downtrend line that it's battling with. So it's not a rush out and buy it because it's back above this level. All we see here is that this prior level of support, which had acted as resistance, has now been overtaken once again. Is this an inverted head and shoulders? If it is, then you could make a target based on this of about 3.5 points higher, which would be about 29.5. Stranger things have happened. It's possible, certainly. Let's just take it, take the action as we see it. Right now in this 30-minute time frame, We had these washout lows down here, and I said on Tuesday, or I think Tuesday, that it looked as though an intermediate term bottom had been made, and that whether we come back down to these lows again at some point in the future is anyone's guess. But for now, it doesn't make sense to be trading that double inverse SKF anymore. We have this low here. We have a higher low. This market held bullishly above the rising 5-day moving average, better than any other group did this week. A high here, breaking past that resistance, and a higher high. So higher highs and higher lows. Let's keep an eye on 25 as an important level next week. Looks like this 5-day moving average ought to catch up to that and maybe continue to offer support. But very impressive action for the financials. Definitely not what most people would have expected earlier in this week. And again, though, you can look at this as a bullish week, but still. Year to date, since since this whole move has unwound, we're still in a horrible downtrend, but just a huge week to the upside in here. Anyone who is short in here got run over pretty good this week, in particular if they added new positions recently. So we'll keep an eye on this rising 5-day moving average next week and the $25 level. This trend line, this downtrend line, let's see what becomes of that early on. And actually, it's got to hold above this $26 level too. Just a couple hours above that level and holding over the weekend does improve the market from a psychological standpoint, but holding on to them is even better. So again, impressive action. The Russell 2000 was up $1.27, and I don't know what the heck's going on here with this candle. I noticed that earlier, but I guess I didn't get it fixed. That obviously didn't happen today. This market was up $1.27, or $1.92%. Let's just look at the shorter-term time frames, because that's not going to go away. We've got some pretty clear levels of what is and should be resistance. $68.5 to $69 level. That's the first important level. Getting above and holding above there will be very bullish for this market. It increases the chances that this will have been, we could call this a successful test of the January lows. And getting above and holding above there puts the $73 level back in play. Again, though, looking at the, well, shoot, we can't even really look at that. Let's look at it here. On the looking at the VWAP from the January lows, we're still, below that. That's about that $69 level. So 69 continues to be a very important level. We've seen, again, that this market has resisted moving past that 69 level as more supply has been added to the market in that level. But on a 30-minute time frame, we're seeing that these lows held. We're seeing this low here, which was higher than this one, another higher low. It didn't make a higher high, though, and that's what keeps me very cautious in here. This 5-day moving average is trying to go positive and has a slight upward slope to it, but we had a little bit of late day selling in this market, so still not not convinced that we're going to see this recovery unfold. It's still time to be very cautious, but we're seeing encouraging signs. That's the real takeaway here for this week, is that we're seeing very encouraging signs in a week when the bad news should have made this market go lower, yet it absorbed it, and we saw pretty good gains across the board for the market. The NASDAQ 100 had made, as we know, recently these lower lows in here, and then again 2 days ago. 43.50 is the key level in here, similar to the 135 level for the spiders and $69 a share for the IWM. If the market can get above 43.50, then I think we can see, the next level, of course, is this 44.50, where the market had done battle with and lost at that level, which led to the most recent sell-off. We've got this 5-day moving average that's trying to flatten out as well. But again, 43.50, 43.60, realistically, 43.60 is going to be where we can breathe a little bit easier on the long side. We've got higher lows. The market, the NASDAQ was unable to show the same type of strength that certainly the financials did. And we've still got a lot more work to do in this market. We've still got that declining 50-day moving average up ahead. and we've the average price in the since the January bottom is right around that 43.60 level as well. Since the beginning of the year, the average price in this market is about 44.65. So all in all, a good trading week, but remaining in a longer term bear market, which just is showing a little bit of signs of recovery.